Hi everyone, welcome back. Today we're going to review how I would trade if I had $100. Before we get into today's video, remember to subscribe and drop a like. There's a lot of big content coming. Actually, episode 5 of the trading challenge is coming out soon. It's going to be a big one. So how would I trade if I had $100? The first thing that I would think about is picking my position size, how much money I'm going to be risking per trade. So I'm going to give you an analogy, an example. Imagine that for your groceries, your budget this week is $70. So you have $70 to spend on groceries this week. Usually what you would do is set $10 per day for groceries, because if you have $70 and there are 7 days in a week, you would do 70 divided by 7, it gives you $10. So that would be your daily budget. Now in trading, how would we pick it is kind of similar. I would look at how many maximum losses in a row can I have. That will determine how much money I will risk per trade. So example, there's a way that you can know, there's a table on the internet that shows you how many losses in a row you can have depending on your win rate. So I'm going to tell it to you now. If your win rate is 80%, you should expect to have a maximum of 5 losses in a row. What does that mean? So if I have $100, I can take 5 trades, because that's when I would blow my account. After 5 trades, 5 losses, I would blow the account. So I would risk $20 per trade. 100 divided by the number of losses, max in a row. So 100 divided by 5 gives me $20. So if my win rate is 80% and my maximum losing streak is 5 trades, 5 losses, I can risk $20 per trade before blowing the account. If my win rate is 70%, my maximum losing streak is 7 trades. 7 losses in a row is the maximum expectancy. So I will take $100 divided by 7, the number of losses that I can have, to give me how much I could risk per trade. In this case, it gives us $15. So if I have a 70% win rate, I'm going to risk $15 per trade. If my win rate is 60%, I can have up to 9 losing trades in a row. So I will do 100, the budget, divided by 9. It gives me $11 to risk per trade. 50% win rate, maximum 11 losses in a row. 40% win rate, up to 13 maximum losses in a row. If you have a 30% win rate, you can have up to 15 losing trades in a row. In that case, 100 divided by 15 is $7. That would be your budget. That would be how much money you risk per trade if your win rate is 30%. So number one, that's how I'm going to pick how much money I'm going to risk per trade. In my case, my win rate is about 70%, so I'm going to risk $15 per trade. Okay, number two, guys, is I'm going to expect bad trades. I'm going to expect, like me, maybe missing a really good trade because I wasn't on the charts, or something happened, I had to do something, or there's a trade that you miss out on by 1 pip, but you didn't get in because you didn't hit your entry, or you lose a trade by 1 pip. These things happen, right? I'm going to go back to the groceries example. If you have your budget for groceries, you might have cheat days. Maybe on the weekend, on a Saturday, you might order a pizza, you might go out with friends, eat out, right? So in your budget for your groceries, you expect that you might have a cheat day or two, so you're going to spend a bit less. Instead of spending $10 per day on groceries, you might be spending $8 per day on groceries, or $7 per day on groceries, expecting that there's going to be a day or two where you're going to spend more. So that's the same thing in trading. Instead of me risking $15 per trade, I'm going to risk $13 per trade, because I'm going to expect to lose or miss a trade. Like I'm going to expect to lose a stupid trade, or like something to happen. It's just part of the cost of doing business. It's normal. Like cheat days, it happens, right? So same in trading, these things happen. So I would expect these days. So now my risk would be $13 per trade. Okay, number 3. Every week I would review the size of my position. So let's say that I'll give you the example of groceries. Let's say your salary at work got higher. You made more money this week. So you might be able to spend a bit more money on groceries this week. So instead of 70, now you have $80 budget for groceries. You could spend a bit more each day. Same thing in trading. After like a week or two, if I made more money in my account, I'm going to increase the position per size. So maybe now I'm going to risk $17 per trade or $18 per trade. You know, scaling, we're going to grow the account this way. It's one way to grow the account. So you change your position size. If I lost money this week, or I have less money for groceries, I might have to reduce how much I spend per day or per trade, right? To fit the budget. So every week or two, review how much you're risking per trade based on your updated balance. And another one is every month withdraw half. Every month I'm going to withdraw half of what I make. I'm going to spend it on whatever I want. Half. I'm going to keep half, 50% in the account. That's also going to help with compounding and growing the account even more and faster. So every month I'm gonna take out half, keep it for me, the profit. Any profit I make, take out half, keep the half in the account. It's gonna get you used to the feeling of withdrawing, of, you know, actually what trading is about. Is to make money, take it out and use it. It's the same thing in groceries. So let's say now you made more money at work and now you have $100 per week for groceries. Instead of spending all of that $100 for groceries, maybe you could spend $85 or $90 and use that $10 for something else, or put in a savings account. Save it or do something else with it. It's the same thing. You don't need to spend all of it, like all of the money you make, you don't need to spend all of it. You can keep some for another purpose. Same thing. So me, at the end of every month, with $100, any profit I make, I'm going to withdraw half. Okay, number 5, I wouldn't have a daily or weekly or monthly goal. I'm at the mercy of the market. I don't decide or dictate or impose how much I expect to make in a day, in a week, in a month. That's not up to me, that's up to the market. My job is just to be there when I have to and perform. Even if I perform really well, maybe I only made one good trade. It's up to the market to decide how much I make in a week. Guys, look at this example. Imagine a professional soccer player, Cristiano Ronaldo. Before a game, he doesn't decide how many goals he's going to score in this game. He's not going to say how many goals, like, I'm going to score 4 goals this game. Or this season I'm going to score 30 goals. Even in interviews, when they ask him, like, ask Ronaldo, wow, you've scored so many goals this game, like, how did you do it? He would say, that's not my goal. I don't think about that. I'm here to help the team. If I score, that's great. But my goal is to help the team and perform well, do my job on the pitch. And then the goals will come. That will be his answer. It's the same thing in trading, guys. You can't decide how many goals or how much money you're going to make this week. That's up to whatever, right? It's not up to you. That's up to the market. It's the same thing in football, same thing in trading. Okay, number 6. Guys, if you're at your job, right, and you break a rule, you do something you weren't supposed to, usually you're fired. Maybe your boss will take you in for like a warning or a talk, but usually you're fired. But in trading, if you make a mistake or you break a rule, there's nobody to fire you. You're going to keep on trading. So it's up to you to be your own boss, to hold yourself accountable. So what I'm going to do with this $100 is I'm going to have a punishment system. If I break a rule, I have to do 500 push-ups. Do you understand? And I set that rule, so I have to do it. I trust myself. If you don't trust yourself, who do you trust? So if you make a rule, put a rule, you're going to have to actually do it. You put it. My issue then, I started enjoying the push-ups. So I had to find something else. Then I said no dessert. Like if I break a rule, no dessert. And I cut my dinner portion in half. So next time on the chart, I knew that if I make a mistake, I'm not going to be eating a lot. And if you mess with my food, that's bad. So I made sure on the chart I made the right things. I didn't break the rules. Because I held myself accountable, I was going to punish myself if I broke a rule. So like for me, it was push-ups, it was eating less for dinner. For you, find your own system, a way that works, that if you break a rule, something to keep you accountable. Right? You're your own boss. Be your own boss. Okay. Number 7. Guys, after if I have 3 losing trades in a row or 3 winning trades in a row, I'm going to have a review. I'm going to just take a minute back. I know some people don't like to take a break. They want to keep on trading. You don't need to take a break, but you just need to make sure that those losses that you just had were all part of the plan. That you didn't maybe risk too much or like break a rule. Make sure they were part of the plan. Think if maybe you need a break, if maybe like there's something wrong that you're doing that you need to review. And the same thing if you're having 3 wins in a row. Same thing. I'm going to take a break and make sure I'm still doing the things I need to do. I still do the things that got me to where I am in the first place. I don't stop doing those things. And I'm not going to like all of a sudden on the next trade, like double my risk, or be so confident. It's the same thing as a job. If you're performing badly at your job, Paul, you're having a bad day or a bad week, it's not going as usual, your boss is probably going to bring you in and talk to you, ask you what's going on, see if they can change things around, change your schedule, maybe recommend you take a day off, take a quick break. So they're going to review things with you to see what's going on and how they could improve. So you have to do that yourself. You're your own boss. If you see that you're doing poorly, don't take it out on the charts or revenge trade, okay? Don't trade emotionally. Review yourself if you're doing the right things, if you need a break, if maybe you've been working too hard, maybe you need more sleep, maybe the hours are not working for you. It's normal. So if you're losing a lot, I'm going to take a break and just think what's the right course of action. And if you're at your job, if you're doing really well, you're going to feel like you deserve a break. So why don't you do that in trading? If you're trading really well, take a break. Don't give your money back to the market. I hope these examples help to clarify the trading aspect of the strategy. So, another thing that I'm going to do with $100 is I'm going to have a trade grading system. What that means is that for my strategy, if my setup is on the 4-hour time frame, there's an 80% chance I'm going to win that trade. But if it's on the 1-hour time frame, my win rate is 50%. So if the trade is on a 4-hour time frame, that's an A setup. If it's on the 1-hour time frame, that's like a B setup. So I would risk more money on the A setup. If it's a 4-hour time frame, I could risk a bit more. If it's on a 1-hour time frame, I'm going to risk a bit less. If it's on a 15-minute time frame, in my plan it says don't take it. That's a F grade. So I don't even trade it, $0 on it. So maybe this is just an idea, okay? I did it. Now I don't do it anymore because now I only take A setups. I have enough A setups. I don't need to take B and C setups. But if you want more trades and you're at that stage in the beginning where you want to catch trades, you could grade your trade and risk the money based on the quality of the setup. If it's a really good trade, maybe risk $15. If you're not sure, maybe the win rate is a bit lower, risk $10. And guys, you also need, I have this, I still do this every week. This is very important for me. I review my performance. I don't review how much money I make. That's up to the market. I review how I performed. Guys, a soccer player, at the end of the game, the coach or somebody else in the department, they're going to go to sit with that player and review that game, see what they did well, like how many dribbles they made, how many goals they scored, how many times did they lose the ball, how many times did they get dribbled on, how many times, they review their performance, see what they could have done better. You could lose the game, that means not to make money in trading, but you could have had a really good game. You could have played really well, but things happen, the cost of doing business. A penalty goes against you, or they get a lucky decision, or you just hit the goal post way too often. This is the cost of the game, part of the game. It's the same in trading. We all miss a trade by one pip, or get stopped out by one pip, or have many losses in a row. It's the part of the game. So what I'm saying is that, yeah, so I review my performance at the end of the week. I don't review how much money I make. I review how I performed. If I how many times did I break a rule? How many times did I make brave and did the right decision? So I review that just to make sure when I'm going to the next game, I'm on the right path. I know that I'm doing the right things. Okay? So, number 9, guys, if I have $100, I am going to treat my trade history like my track record, my proof of success. It's what defines my trading, my proof of being a real trader. You can use this track record if you need investors, if you want to prove your authenticity, if you need more money, or if you just want to pass a challenge. I don't know. There's so many things you can do with it. It's your proof of authenticity, your proof of trading. So like, imagine you want to go to an investor and he looks at your trading history on this account and he sees, yeah, okay, you make you make consistent like $10 a lot, very often. That's really good. But then he sees like loss, $100 loss. It's very erratic. How can he be consistently making $10 and then all of a sudden he has $100 loss? It reflects poorly on you, right? So you would trade professionally, treat that account, your trading history, as if like it represents you, who you are. Okay? So trade professionally, trade professionally. Your trade history is your track record. That's how I see it. That way when I'm trading, it's very professional. I don't make erratic or dumb decisions, or like triple risk on the next trade, like double my position right away, or do things that are not on the plan. No. So think of your trade history as your track record, your proof of being a real trader. Okay, number 10 is I would avoid taking too many trades at the same time on the same currency, on the same market, like the euro. I won't take 3 trades at the same time on the euro. Maybe 2, even 2 is limited. But if I won't have too many trades at the same time on the same market. That's too much dependency on the euro. That means all my trades depend on the euro. Either I'm going to win all of them or lose all of them. That's not good. So if I have open trades, I make sure it's from different markets. They're not correlated. They don't really relate or really influence each other. The result of one trade does not influence the result of another trade. Okay. Also, I don't have too many open trades at the same time. Maximum 3, maybe 4 if there's like way too many setups that week. If it's really part of the plan. But I would have up to 3 trades per week, per open positions at the same time. That way, I'm on top of them. I don't forget anything about them. I still am in control of them. I know what I have to do in them. If I have too many open trades at the same time, I might get confused, forget to do something on one of them. I would be more prone to taking gambling decisions. Because if I have so many open trades, I can kind of do what I want. I'll let luck be involved. So I wouldn't have too many open trades open at the same time, so I can manage them well. Number 11 is I would remember, guys, that trading is 80% psychology. When I'm trading, I'm not too focused on the chart. I have the awareness to control my emotions. Remember that the market wants to make me angry so that I break my rules. The market wants to make me try to change my strategy. So that's the psychological part of the game. I remember that trading is 80% psychology. Always when I'm trading, I remember that. So also, guys, with this challenge, $100, if I would trade with that, I recommend watching my other videos. That's really going to help you. I almost could promise that you will make it as a trader. I drop so much incredible information. It's crazy. And guys, the last tip is that the other thing you can do with $100 that I would do is I would spend it on prop firms. With $50, I can get a 5K account. Prop firm account, 5K prop firm account. And then a few weeks later, I still have $50 to open another 5K prop firm account. So you could look at it that way. Spend that money on prop firm challenges. So you have 2 routes. I hope this information was helpful for you guys. I really think I provided some great ideas, and this is what I would do if I had $100. All of these aspects are things that I currently do in the amounts that I trade now. Okay? So good luck with your trading. I hope you learned something. If you did, drop a like. Don't forget to subscribe. There's a lot of big content coming, okay? Good luck with your trading, guys. Okay? Take care.